All right, welcome back for the episode of Carnivore Trades. Today is Friday, May 19th, 2023. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into it today. So pretty much a nothing burger for the most part. We did have a nice gap up and then kind of just barcoded sideways a little bit there ahead of Powell. And then we had a little bit of a failure. And we rolled over. Basically, Bernanke, Powell was a nothing burger. We did have some debt ceiling nonsense come out about, Republicans walked out of the negotiating room. This is just BS so they can push the market around for OPEX week. If you ask me, not too much to be gained out of today other than the fact that SPX closed or failed to close above 4,200 for the second consecutive day. Doesn't mean it's like anything terrible here, but it was defended. Maybe Jamie Dimon's starting to watch that 4320 call and get a little nervous there. Either way, all in all, nothing has really changed, all things considered, although the market does look a little tired here. SPY here, again, gap fill into this area here around 422.14. And we did finally get to that 420 area that I've been talking about for quite a while. High of the day was 420.72. Never quite filled the gap. And you still have that kind of broadening channel that could still get hit. Again, they do some, supposedly they're going to talk about the debt ceiling over the weekend. So maybe they, get into that and maybe we can get a gap up or something like that. I can't rule anything out. But overall, nothing has really changed for the most part here. I'm trying to find some data here. Just bear with me for 1 second. I believe, so we're, just kind of on some gamma here about yesterday, because obviously the last 2 days were pretty eventful. Yes. So according to Zero Hedge, we had basically the biggest gamma squeeze in the last 9 years, really on the NDX more than anything. If we flip over to the triple Qs here, just an amazing move, right? A lot of it is OPEX related, if you ask me. We've talked about volatility, and one thing I want to draw your attention to as well, if we look at the VIX, the market was basically flat by the end of the day, down just 15 basis points. VIX was up 4%, so there is some accumulation here. And if we look at the VIXM, it's kind of a medium-term volatility gauge rather than short-term. You did have a pretty good pop there, so it does tell me that investors are kind of looking a little bit ahead here. I still think the market's pretty complacent. And these types of vertical moves, we've seen them before, right? February, August, even March of last year. And I know everybody's going to look at, especially kind of like if we look at the NQ, they're going to kind of look at this and say, well, you kind of have like a bull flag here and then you broke out. I still see it as kind of a rising wedge with a peak above it. But either way, if you look at what you're going into, and we just go to a monthly, this is a lot of supply. And we look at the volume, and let's go back to the triple Qs here. We're getting into this area here on declining volume, and there was very heavy institutional selling into this area. So again, nothing to say the market can't go up a little bit higher here, but into OPEX here, vol hedges rolling off, gamma hedges rolling off, NVIDIA, 60% of the call volume the last 2 days was for today's strike. So that's not real accumulation. It's just dealers buying hedges essentially that will ultimately roll off now after 4 p.m. So again, amazing move here. We've gone a little bit higher than I thought we would have on the triple Qs. The SPY, we're still kind of in the range that we've expected here. But either way, I still think we're into way closer to resistance than support. But either way, again, really just a nothing burger today. OPEX, they kept us mostly pinned. We had the gap up, we rolled over, and then just went sideways. I will say for Monday, possible little continuation pattern here. So if we look at the intraday, and I'm kind of back up a little bit more, you can make a case you have kind of like a 5-wave here. And I don't really use Elliott theory that often, but I do like the 5-wave and then 3 ABC. So 1, 2, 3, 4, 5. You can make a case you have a A, B, and then possible C pattern. The target for that, and we'll just go to an hourly here, would be right around 416. And why I find that intriguing is if you look on the book map here on the ES, that's right at 4175. And there's a pretty big order there. Now, there's no guarantee that order will be there Monday. It could be there, though. We can look right there. So 416 spies right where this pivot is. And you look at the ES 475, it's right above that, right? Just right in that area, though. So possible little pattern there for continuation if we get a continued pullback. But again, this market's temperamental with the debt ceiling. If they make some BS up over the weekend, they could come up with some headline. They could get a deal done. That could negate that. But just something to watch. Little cookie crumb going into Monday. Outside of that, again, nothing has really changed here. Again, we'll still look for possible a little more upside, maybe in the ES and maybe even in the Qs here. But I just think that we're definitely getting long in the tooth here. By the way, if we look at, speaking of long in the tooth, again, we talked about the RSI before on the triple Qs, and we did break through that kind of pattern here, but still a good divergence there was building. But every time that we have a sharp decline on the RSI after we've hit 70, it's marked either at least a short-term top or a major top outside of really the 2021 period where we're doing full-on QE with 0% interest rates. But ever since we've topped in November, it has marked some type of a significant decline here, and you can see the RSI starting to downtick after that 70 handle. So we'll see if we can get going there. Either way, though, bears really need to step up here and make a statement. I do think that we are seeing the possible kind of makings of that again, volatility accumulation with a downish, flattish to down, flattish to up market. That's definitely one of the signs, and also going vertical after an already enormous bull run is also one of those signs as well. Anyways, let's get over to the Russell here today. So Russell gap and crap, that actually is still on the weaker side. And again, it's been kind of a mixed bag. There's lots of sectors here today that were, for instance, like XLE and IWM were holding up well early, and tech was weaker. And then as soon as we got the debt ceiling news, tech kind of reversed. You saw NVIDIA, take a look at NVIDIA, kind of floated up around that time. Even kind of Microsoft got a little bit of a bid. Meta bottomed around the same time. Amazon got a little uptick there. And then XLE and all those other names started to fall over themselves. Same thing with the Russell there, as it did end much lower. So still a mixed bag. A lot of it maybe just OPEX related, them pushing the market around where they want it to go. But either way, Russell 2000 finishing down 64 basis points. I still don't like this pattern on any of the time frames. Dow here down 35 basis points. Not a great pattern here, really bullish or bearish. They're really kind of neutral here. More bearish if you get below 331.45 on the diamond. Near term above 338 would be a little bit more bullish. That could get you up to that gap fill there, which is at 340.36 there. Over to the semiconductors. So semiconductors just backing off a little bit, down just 54 basis points. AMD down 2% here inside day. Interested to see what happens with NVIDIA. I mean, this is, speaking of vertical moves, I mean, not that it needs to be said, everybody's aware, but again, just lots of gamma squeezing here, and I'm very interested to see what market makers and dealers do now that they don't need these hedges anymore. But either way, semiconductors hanging in there, a little bit of an inside day, and we'll see how they do. I think this can get up to about 136 or 137. So that's right around that red bar. There's that previous gap there on the weekly right in that area, and it's been an EQ, right? So, or not an EQ, but a POC. So if you look at here, 138 was your pivot. We hit it again right in this area, kind of had the opening candle there, pivot high right there. So right in that area should be some resistance there on the SMH. But again, nice move this week, and we'll continue to respect it. IGV also an inside day. That was actually strong all day long. To me, this tells me that 313 was probably max pain because, right, look at, it's not a coincidence they just gamma squeezed us up the last 2 days, and then today, look at how tight, right? So they wanted us to close right there at 313. That's where they needed it to go, and that's where it went. Again, next level, now that we're through 310, is right at 315.43. That's the gap fill from basically the August highs. Dow transports here on the weaker side, although it did come off the lows again, continuing to diverge from the rest of the market here. I say it's like a broken record. Eventually this will bite the market. But again, for now, we have light volume. Nothing to say they can't float us higher. I just don't like the pattern here on the weekly or the daily. Really, the monthly isn't that great either, but you do have this green bar here, so that's really your positive right now. But anyways, over to bonds. So bonds were interesting today. ZT here, this lost support on a weekly closing basis. Looks like we're just hovering on this green bar low, nothing crazy. You still have the big weekly bar there, but you did kind of do some technical damage. this is not good. So this keeps going down. It's going to put pressure on the Fed to continue to raise rates. It's really that simple. And the market right now has rate cuts priced in as early as July. So I don't think the market's really paying attention to this. Bonds did get a pretty good bid when that debt ceiling news was announced. You can see the ZT pumping up pretty sharply. If we look at the TNX, obviously the 10-year yield coming in, but came way off the lows. 30-year came way off the lows. Speaking of the 30-year, let's look at ZB. Let's look at the note. But you're creeping up on 4% there. But look at the note here. That's a confirmed breakdown. And if you want to call it, I mean, it's sloppy, but that, that's a head and shoulder, right? I mean, there's your shoulder, head, kind of a sloppy right shoulder, but that's broken down and confirmed below. On the daily, on the weekly, guess what? Closed below this green bar low. What is that? Failed bullish inside bar. So I think the 30-year is poised for another move down. So that is not a good look here. If they wanted to save it, they would have. The 10-year here also backing off. If we look at the TNX, again, that also is creeping up near that 3.7, 3.8 area. Again, so yields, again, I've been saying this for a long time. My base case is they're going higher. They're not going lower. And if you look on the big picture, that 20 MA is catching up. So that's really all this is a monthly bull flag. But either way, yields still in a holding pattern. I don't think they're quite ready to break out yet. Maybe towards the second half of the year, we'll see something. But for right now, they're creeping up, and that 2-year yield keeps going up. The Fed's going to have to keep raising. The market's not paying attention to this right now, but they will. Speaking of not paying attention to, HYG, not the greatest here. Again, just kind of diverge from reality. Just add that to the pile of other things. Home builders here, nice reversal. XHB finally coming back in. Basically an engulfing reversal. It just saved the engulfing reversal by 20 cents. But still a pretty good sell here into double top. Came back in nicely. You see the same thing on the ITB. Now, these are still not broken, but, I was just telling my members this, these kind of, you can see these narratives here right around the OPEX areas here. So we kind of went up into OPEX, we came down, and then we went up again. Then we came down into the next OPEX, then we were flat. Then we went up into the next OPEX. We've gone up into this OPEX before a good reversal. Maybe this can be a top here. I think the home builders have a terrible second half. But for right now, they're holding up. Nothing's broken, but we do have a reversal candle to go off of here. And if we look at, decent volume, I prefer heavier volume on both ITB and XHB, but good reversal. That's an engulfing on ITB, but you got to break this 20 MA and confirm below it. And if you can get below 73.90 on the ITB, then you can say, well, now you have a failed breakout, maybe on the weekly there. But until that happens, they're still holding up well and they're still defying gravity. But I think those orders are going to start coming in, or I should say lack thereof, orders coming in the second half. And that's going to start to be a problem here. But for right now, the market doesn't care. VNQ, daily bearish inside bar. So that is setting up for another move lower here. I don't like this chart at all. You guys know that. So general real estate equities under pressure. XLF down 43 basis points. Still kind of neutral here on the daily. You are above the 50 and the 20 despite the back off today. But weekly down move, sideways to up chop. That can be an inside bar for a move lower, potentially KRE. That was lower again as well. We talked about that 40 level. I said as soon as you get up there, there's going to be sellers. And, we got a nice little dip off of that. Maybe it can go up and test the 50 moving average, but I still think there's a lot of supply right here. So just be careful with those regionals right now, KBE. And again, just because there's no news right now doesn't mean there won't be. Again, we're just starting to see the rate hikes filter through the economy now, barely. So anyways, there's the KBE as well. Also, basically an engulfing reversal that did come off the lows. XBD, broker dealers, stalling out at the 50 MA. Again, if this continues sideways, it can have one more pop. But again, I don't really love the pattern there. And that 50 MA might hold for all we know. So, all right, let's get over to crude here. So big drop in the rig count for crude. Still finished down a penny here. You see 71.93 right there. Yeah, a bit of a nothing burger, right? I'm not bullish or bearish on it right now. In fact, I would say unless you can get, you can make a case that's a 20 MA rejection there on the daily. So not a sign of strength. So I would say probably I would lean 60-40 bear right now, but I wouldn't do anything with it at the moment unless it gives me a better pattern. And again, you got to save the, you got to stay above these lows pretty much. It's really that simple at this point. If you can get back above these moving averages, then we can talk here, and then you got to get above this red bar at 76.11. But for right now, it's a little bit more of a neutral chart to me, neutral to slight bear. XLE getting a little bit of a pop up 3/4. Still don't love the chart. Hey, they saved the trend line here for one more week, but this is not, this is not very good here. The fact you're hitting it so many times right now. XOP. Again, up today, rejection at the 50 MA. What have we been talking about lately? 125 would be an area to look at. 124.92 is the high of the day, and then it peeled back off of that. OIH rejected at the 20 MA. I think this will eventually break 250, but it's holding up for now. Nat gas backed off a little bit here, but basically flat. So the 100 MA acting as, just a little bit of resistance here. Again, going into kind of this area where you broke down. If this consolidates, it's headed to $3 and higher. Dollar index backing off as well with the debt ceiling talk, but it did come off the lows pretty decently. So there's that big sell, and then we came off the lows a little bit there. More importantly, the weekly above the 20-week moving average with a close, above 102.80 with a close. I like the dollar here. I think it's very, very likely now that the lows are in. Gold here, getting a bounce today. We talked about, right around 1950, it would get a pop. Silver, more specifically, I like that level. I said even yesterday, is like, I believe I said to members anyway, but I said, you can probably take this if you're aggressive right here at 2350. We talked about that target for the last couple of weeks. Even when it was up here, I said, no, we got to go back to 2350. Everybody trolled me for it, but here we are. Nice little bounce, and then it's getting a bid off of that. Right now, near term, you got to get through 2450, and that 50 MA, it probably wants to go test the 22. But if you start to go sideways, it's going to set up for another move down into the 22 range. So, if you take the trade, just protect it here, put a stop below the low. Pretty simple. But I still like it for a little bit of a bounce here. Platinum also backing off a little bit as well. Again, I like the bigger time frames here. Palladium, I like the bigger time frames as well. Though that got a nice bid up for 0.36% on the day, and then copper continues to chop bearish inside bar. I don't like 360 anymore. I think this is headed lower, really, unless proven otherwise. If you can negate this red bar, then it's a different story. But for right now, I'm not a fan of the copper chart. And then lastly, Bitcoin here, continuing to stay below this head and shoulder top pattern. The weekly chart is still okay. You're still holding these moving averages, but definitely weaker on the daily. And we had this is the algo movement to the debt ceiling. If you look at the KRE, by the way, took a big sharp dump at the same time the debt ceiling came out. Bitcoin got a bid. Gold got a bid, bonds got a bid. So it was acting like that risk off kind of trade again. And then immediately it came right back down. So Bitcoin, it's like, is it risk off? Is it risk on? Is it a safe haven? We're not sure. But right now, bottom line, head and shoulder top on the daily until proven otherwise. Weekly, still okay for now. But again, this is making lower highs now with lower lows. Could be telling us something about the stock market. Again, the Bitcoin has been a leading indicator in the past. Anyways, guys, let's get back to the SPY here really quick. So again, can they make up some BS about the debt ceiling over the weekend, get us up to 422? Absolutely. We've been talking about that pattern for a while. And again, that broadening wedge is up there. I just think we're closer to resistance and support. And don't think that sell in May and go away is over yet. We still have second half of the month to go. And we'll see. The volatility window is open here, and volatility is behaving like it's smart money is trying to look for a top here as we kind of squeeze higher on some of these names. Anyways, guys, I'm going to wrap up here. You guys take care. Have a great weekend. Thank you, guys. I will talk to you all next week.